Welcome back. You're watching Hot Stoxx here on CNBC Africa. Foschini, South Africa's second biggest clothing retailer, reported a 17.3% rise in sales growth for the quarter ended December, thanks to encouraging trade over the Christmas period. The group's same-store growth grew by 11.4%, while merchandise inflation for the period averaged 6%. Once again, Paul, that inflation story coming through, but perhaps not as big of a factor for Foschini as it is for Truworths.
Yeah, if you go back a couple of years, Foschini was one of the companies that stumbled quite badly in the middle of the uncertainty in 08-09 when everybody was doing badly and the economy was contracting and so on. They had a big mix with wrong stock ordered, they had a management change. So they fell further, and so they've recovered in a more sprightly way. So unlike Truworths we were talking about earlier, which just continued to do well throughout the whole thing. I think they're somewhat similarly positioned, though. I mean, they're in the same malls, they're at the same kind of target market. So I don't have much more to say about them, except that they're also looking fairly pricey at this point, have done well. You know, earnings where they're going to be somewhere around the 10, 11 Rand level in years to come. That's the kind of 10 times multiple, trading around 110 now.
We know that Spanish retailers are planning to open up a second store in Durban. They've got a store here in Johannesburg and Sandton. Could you just give us your take on the retail sector versus competition from foreigners?
Yeah, it's an interesting question because remember, companies like Zara are enormous, and this is the beginnings of their entry into this continent. So that's the one thing. Globally, in developed and sophisticated markets like Europe and the US, you have many more specialist retailers that make and market their own stuff. And that is bigger of a factor than the department store type model, which we still have in this country. Having said that, in other developing parts of the world like India, they don't have any of these retailers. It's all just the sort of mom and pop type stuff. So I think why people like our retailers and why they trade on high multiples is also because the foreigners like the fact that they get the emerging market thing here and they get good competent management and good systems and all of that stuff. But I think there are competitive threats. I think people like Zara and then the internationalization of some of those specialist retailers with high-end flagship type stores is a problem.
So what would be growth drivers for the likes of Foschini? I mean, we know that Woolworths has got on quite an aggressive e-commerce launch now, selling stuff on Facebook because they've got a huge following on Facebook. What would someone like Foschini do to counter the threats?
I'm not sure. I mean, they'll just have to carry on plugging what they do. But they could, for example, develop in-store sort of mini-branded areas. You know, you've seen that trend in the US and so on as well. So high-end retailers like Macy's or Bloomingdale's and so on will have, you know, like a True Religion in-store store, or they'll have, you know, a Zara in, you know, so
similar to what Studdard does.
Yeah, you can do that. But, you know, nobody, again, is any good other than from their last quarterly update. So it's a very competitive environment and lots of ways to get it wrong.
Moxima, let's come to that share price now. We've seen a massive bullish trend and they've formed a new high, but it doesn't look like they're going to be pulling through. Take us through the Foschini chart.
Precisely. I mean, this is a very nice, sustainable bull trend that it's been trading in. The only concern is that steep uptrend, and steep uptrends are not really sustainable. It did form a new high this week at 11250, but seemingly it's retracted all those profits. So there's a bit of a doji forming there, which is a candle that signals indecision and within investors, which could, you know, put risk onto the current steep uptrend. So if it falls anything below 150, then it would end the steep uptrend and possibly push Foschini back onto the support trend line. But this would it won't be doom and gloom either. It would just be a counter trend within the major bull trend. Negative breakout would only be confirmed at 82 Rand, and we don't see it going there anytime soon. RSI slightly overbought, which also supports our argument that a pullback is looming.
Now, we know that you've chosen Pick and Pay as your stock pick, but tell us what you think about Foschini, hot or not for you.
Foschini will be more lukewarm. I'm very in the middle with this.
Sitting on the fence today.
Sitting on the fence merely because it's within its bull trend. It's just that steep uptrend that is giving us those alarm bells. So in other words, if you are overweight, you try and sell some of your Foschinis on every uptick, because it is overextended, we feel, and is expensive at this price.
Expensive at this price, Paul. I suspect that you're going to concur.
Well, like I said, I think they'll all do well. They'll probably do well as well, but I'd rather be in some of those that have a sort of better niche and a more obvious and defendable place in the market. I think this is a little bit of an also ran.
Let's come to your stock pick, and you have a knack for choosing stocks that are not on the JSE, because last time you chose Lululemon, and today you've gone for something else that's also listed in the US. What have you got for us today, Mr. Theron?
Well, it's a good segue to what we were talking about earlier, which is that, you know, if you look globally, there's a whole range of other things you could do. So the stock I've gone for is called Under Armour, which is a specialist manufacturer of garments in the sporting industry. They started off making undergarments for American football players, but they've broadened that now into sort of general sports attire and, you know, cold weather performance gear and all that kind of stuff. The market loves these kind of secular outperformers. So that tiny company that suddenly goes big, gets a bit of a visibility, starts developing a retail footprint, and off you go. So I like them. I like the sports space generally, so Nike and some of those others. Under Armour is now entering also the European market. They've got a sponsorship deal with Liverpool Football Club because Adidas dropped them because they weren't doing well enough. So, I mean, you can buy a stock like that. It's a $4 billion market cap company, so it's not insignificant in size. It's also on an aggressive forward earnings basis, but it's beginning to be talked about globally. And I think that kind of opportunity may make more sense than getting into the likes of the stocks we've been talking about here, because they are not global necessarily, and they may not have as kind of obvious a niche and a road forward.
In a South African context, would they compare to someone like Holsport?
Well, Holsport is a specialist retailer. I mean, the comparable example of Holsport globally would be people like Dick's Sporting Goods and, you know, the big box clothing retailers in the US. So it's probably more similar to Holsport's subsidiary First Ascent, which is that brand that they own 75% of, where they make these sort of specialist fabrics and goods for outdoor hiking and the likes.
Under Armour, your stock pick. Thanks, Paul. Moxima, let's come to you. And many people would think, what has gone wrong with Moxima? What are you thinking?
I know.
People think Pick n Pay is a dog, Moxima. Are you feeling excited by that uptick that we're seeing there, or what is the story? Why have you chosen this price?
I could be the prophet of gloom with all these defensive stocks at this point in time, but I am so not excited about this uptrend. For two reasons. It's mega overbought, and secondly, when you look at the relative charts, it's underperforming the top 40 and most of its peers. That itself is, there's already a divergence that's forming between the relative chart and the absolute chart, which is already a warning signal on its own. Because of that overbought position, we really don't see it going above 48.50, and if it really doesn't and it struggles to go above that, then a potential continuation double top could form with the trough at 35.10. Now that's way below, but if Pick n Pay does fall below 45 Rand, then we could see a ripple effect through those support levels. We would really sell at every uptick because the relative charts are not supporting the current uptrend.
So this is something that's going to be quite a favorite then for traders as far as what Moxima is saying is concerned. Paul, do you agree with that take of
or a short position, it sounds like. Well, I'm not sure quite what lies ahead for these guys, because speaking fundamentally for a minute, they've got to do their big distribution center build out. They're late compared to the others. They've recruited a whole lot of new management. I mean, there are those that are drawn to the contrarian position and to the stock that is beaten down within the sector. That's why I think it has had that bounce in recent months. But I guess it's going to either confirm its breakout and then continue to recover its market share. But I guess it could also stumble, at which point it'll lose further confidence. So I'd be waiting to see how it looks in terms of its earnings going forward.